Good afternoon, and welcome to Farm Focus for Tuesday, October 15th. Grain markets closed lower today, partially on a correction from the recent rally highs, and partially on concerns that China may be trying to change the deal again. December corn futures were down 5 cents today, finishing at $3.93 per bushel. July 2020 corn down a penny at $4.15. November soybeans were 7 cents lower today, finishing at $9.34. July 2020 beans down 4 cents at $9.76. Kansas City December wheat was a nickel lower on the day, finishing at $4.21. Minneapolis December wheat down 7 cents at $5.46. Outside markets provided mostly a negative influence, although the stock market was higher today. But crude oil currently 80 cents per barrel lower at $52.79. Ethanol down 7 cents per gallon at $1.43. Gold down $14 an ounce at $1,478. The U.S. dollar index down 16 points at 98.01. And the stock market currently 293 points higher, with the Dow Jones trading at 27,080. Livestock markets were mixed today, with October live cattle up 38 cents at 111 even. October feeder cattle down 55 cents at 145 even. And October hogs up 15 cents at 63.08. Grain prices did finish lower across the board today. The rally off the September lows has so far, through yesterday morning's high, 50 cents rally in corn, 94 cents in beans, and 46 cents in Kansas City wheat. Traders are taking a breather and reassessing the recent news developments following the recent rally. The NOPA soybean crush, that's the National Oilseed Processors Association. They account for about 95–96% of the nation's crush, so it is a good gauge. The September crush came in at a disappointing 152.6 million bushels. This was well below the average trade guess of 162.2 and also below last year's September crush of 160.8. This was viewed as a negative item for soybeans in today's trade. Weekly export inspections came out today, a day later than normal due to the Columbus Day holiday yesterday, and they remain disappointing on a week-to-week basis for corn, but were okay for soybeans and for wheat. Year-to-date inspections, corn is down 63.9% from last year, beans are up 7.4% from last year, and wheat is up 20.8% from last year's total at this time. If we look at a chart showing corn export inspections, we're just a month and a half into the marketing year, but this week's inspections at 18.5 million bushels means that our year-to-date total down 63% from where we're at a year ago, and today's total at just 18.5 million, less than half the level needed to reach USDA's export forecast. And keep in mind, this includes USDA's reduction in corn exports in the October crop report last week. In soybeans, our weekly inspections at 35 million bushels was right on the weekly total needed to reach USDA's export forecast, and we are running a little bit ahead of the pace needed to reach USDA. But unfortunately, this is the time of the year when we normally see exports really ramping up. It's very possible that, given the fact that harvest is 2 to 3 weeks late, that our ramp up in shipments could be 2 to 3 weeks late, but we do need to see shipments picking up over the next few weeks into the maybe 50 to close to 60 million bushels would certainly be good news. Wheat inspections came in near 17 million bushels. That's a little bit disappointing, down for the second week in a row, and a little bit below the level needed to reach USDA's export forecast, but our year-to-date exports are still over 20% ahead of the year-ago pace, so we're still well on our way to reaching USDA's export forecast. In other grain market news, China may be up to its old tricks again of changing the deal after it's been somewhat discussed verbally. President Trump had announced on Friday that the U.S. and China had reached an agreement on phase one of a trade deal with China, which would include $40 to $50 billion of Chinese purchases of U.S. agricultural goods. Today, China says that the $40 to $50 billion that's being discussed, that is an accurate number, but that total would require both China and the U.S. to remove any existing tariffs. The U.S. has made no mention of removing existing tariffs, just eliminating the increase in tariffs that was scheduled for October 15th. So therefore, what China is stating now is not what the U.S. was stating was agreed upon in the talks last week. Some analysts believe that this new wrinkle could provide another roadblock, but both the United States and China have indicated that additional talks in late October are likely, and keep in mind that Trump had stated that it could take 3 to 5 weeks to get a phase one deal on paper, so we're still hopeful that there could be additional talks later in October and continue to work towards a phase one agreement. USDA will update its weekly crop progress and condition reports later this afternoon. Crop condition ratings could slip just a little bit from last week due to the recent winter storm and cold temperatures. Most of the snow that fell and was on the ground in South Dakota and western Minnesota has melted, but we still see heavy snows remaining on the ground in North Dakota, where this area of darkest blue indicating still 10 to 20 inches of snow on the ground, and that extends up into the southern Canadian prairies of Manitoba. And I did want to pull up low temperatures from yesterday morning. 20-degree temperatures across southern Minnesota, all of northern Iowa into Wisconsin and northwest Illinois, continuing to extend where the growing season has ended. Previously, portions of southern Minnesota and northeast Iowa had avoided the extremely cold temperatures and were mostly in the low 30s. But that situation changed yesterday morning when temperatures into the 20s were seen across almost all of northern Iowa and southern Minnesota. The combination of season-ending cold, which could have impacted some of the latest planted crops that were not yet mature, combined with the snow that fell, is likely to result in crop conditions maybe being down 1 percentage point in the good to excellent category for corn and beans this afternoon. The 7-day precipitation forecast is indicating rainfall from late Saturday through Sunday, Monday, Tuesday could be generally a ½ inch to 1.5 inches across most of the U.S. corn and bean belt, and that would again slow down the harvest here across the U.S. The good news is that the bulk of the U.S. corn and bean belt should see dry conditions through this week and possibly into Saturday as well, so we should have a very nice window for field work and harvesting activity over the next 3 to 4 to possibly even 5 days. The 6 to 10 day forecast reflects that heavy rain in the central U.S., including almost all of the corn and bean belt. That's going to slow things down. And then we get into a typical fall pattern with relatively cool temperatures, but relatively dry conditions in the 8 to 14 day, which would be October 22nd through October 29th. Finally, I did want to pull up a chart that shows the value of U.S. agricultural trade with China. Since U.S. and China have been discussing ramping up U.S. ag sales over the next few years to reach a $40 to $50 billion per year total, following the U.S.-China trade war, last year's agricultural exports under $10 billion. But prior to that, we had seen 4 consecutive years with the U.S. ag sales to China very near, either above or below the $20 billion mark. So if we could ramp up business to 40 or 50 billion annually, that would be a very significant improvement. But again, number of roadblocks still in place to reaching that total. Taking a look at today's December corn chart, corn prices remain in a very consistent uptrend. That's been in place for 5 weeks now. We will have corrections and pullbacks from time to time. We had a correction here today. Current chart support is likely to come in where a gap was left in the charts back in early August. That gap comes into play, 388 to 392, very close to our uptrend line now comes into play, and that should provide pretty solid chart support. Soybeans corrected today to the downside on some disappointing comments from China and also a very small NOPA soybean crush number. Beans are also in a very strong uptrend, but there will also be corrections and pullbacks in the bean market. We've mentioned that it could be 2 steps forward and 1 step back type of trade. And so right now we've got fairly good chart support at the breakout level above the previous highs and consolidation area around 920 on the November chart. That's about 15 cents below where we closed today. Turning to our Kansas City December wheat chart, wheat prices have rallied to new highs as of yesterday up to 427. That allowed us to reconfigure the chart that is now, rather than in a sideways range, is now in a gradual uptrend. If corn and beans have a correction and wheat sees one as well, chart support should come in between $4 and about 408 on the December chart. We closed today at 421. But it is worth noting that the long-term chart has turned upward for corn, beans, and wheat, so we're likely to see fund buying or additional short covering by the funds, specifically in corn and wheat, on further setbacks over the next few days. This is Dan Kauger for Heartland Farm Partners. Thanks for joining us, and have a good afternoon.